Welcome back to yet another series on our Accounting 101. So, for today, we're going to look at some notes that are very troublesome for most learners that they find mostly challenging. And firstly, we are going to look at the tangible or the fixed asset note. I'll just call it the fixed asset note. It is mostly troublesome to most accounting students. And let me just draw a template of it quickly. Right, there we have it, our format. We have our carrying amount at beginning, which is made of our cost price less our accumulated depreciation. And we will have our movements. Our movements are made by any additions, disposal, depreciation, and sometimes a fair value adjustment. And then that'll give us our carrying amount at end, which is made up of our cost less our accumulated depreciation. Now it is important to know how this adjustment or this table works and how do the amounts affect each other. So for instance, we have our cost less our accumulated depreciation. That will give us this C there. It's A less B. That will give us C. Or let me do this instead. Let me rather say X less X. That will give us X. But this is land really. Does land really have any depreciation? No. So this is really zero. This will always remain zero. And when you have an addition on land is usually the most easiest part of this fixed asset note. Maybe I should have supposed to, let me rather do this. Separate the two. Land, vehicles, and buildings. Yes, it's better that way, to not just to reduce confusion. And we might have additions right there, so that'll be X plus X. We might have disposals minus X. Disposals at what? At carrying amount. So you only subtract your carrying amount there. We might have fair value adjustments, which will increase our amount. And at the end, our cost will now be that plus that less that plus that. So it's 1x plus x is 2x minus x is x, and then that'll still be 2x. That'll still be 2x minus 0, still be 2x. But then it then starts being different for vehicles and buildings, because these two actually take on depreciation. And same, we have xx minus x to give us x. Still do the same, xx minus x, that'll give us x. We might have additions, that is a positive. We might have disposals at carrying amount still. We might depreciation, yes, definitely. We might still have fair value adjustments, which can increase our amount. And we will still have accumulated depreciation will now be made up of this x plus this x. So we will have xx or 2x per se our cost is now made up of the carrying amount plus my additions less, okay, we shouldn't subtract this depreciation, so it's this plus my addition less my disposals and my fair value adjustments. So it'll be x plus x minus x, so it's 2x minus x, that's x, and plus x, that's 2x. So in essence, we have 2x minus 2x and it gives us 0 there. And even here, it's still going to be the same. 2x. So it is really important to know how this note actually works. And moving on now, we're going to look at an example, or rather a question paper that includes this example and an income statement. Stay tuned.